Guys, welcome back to the channel. In today's video, we're going to talk about Coinbase and the opportunity to buy into this particular company tomorrow, April the 14th, 2021 on the NASDAQ. They are going public tomorrow without an IPO. So we're going to talk about exactly what that means, how it's going to look, and what to expect potentially tomorrow. So just to reiterate, guys, I'm not a financial advisor. Make sure you do your own research before investing. If you find value in today's video, make sure that you smash that thumbs up button, subscribe to the channel, hit the notification bell. That way YouTube can let you know when we release new content. So I'm going to read through this article, guys, and we're going to talk just a little bit about who Coinbase is, give you some numbers from Coinbase, and we're going to talk, like I said, a little bit about what to expect from tomorrow it going public. Okay, so basically, Coinbase is a trading platform where you can trade cryptocurrencies, and every transaction that you either buy or sell, you'll have some type of fee to basically pay Coinbase is how they make their money. Okay, so it says mega cryptocurrency exchange Coinbase is about to launch one of the most highly anticipated public offerings of 2021. The crypto marketplace, which some estimate could fetch an astonishing $100 billion valuation, though based on Coinbase's reference price, its valuation may be more in the $65 billion range, is set to begin trading on Wednesday, but via a less common process, the direct listing. Okay, with the confluence of a roaring stock market, a crypto market that's hitting all-time highs, and Coinbase healthy balance sheet itself, this is a great time for it to become public. But since the company is sidestepping a traditional IPO, what can investors actually expect from Coinbase's post-debut trading action? So we're going to talk about what a direct listing is. So you may remember direct listings from big debuts such as Spotify, Slack, Palantir. Basically, a direct listing, the company is isn't issuing any new shares or raising any extra capital in the debut, and it foregoes an underwriter. Instead of having a bank underwrite the listing and drum up buyers for the shares of an IPO, the company is opening up their shares directly to the public. So instead of issuing a bunch of new shares, it's just whatever shares are available now. They're just making that open to the public for people to come in and buy. Okay. In recent months, there's been plenty of discussion about the so-called IPO pop, where a stock skyrockets from the IPO price. Often when there's a big pop, you'll see a lot of headlines about how much money was left on the table, or or what is frequently criticized as mispricing the stock. In December, big names like Airbnb and DoorDash saw enormous IPO pops on the first day, with Airbnb, for example, soaring over 100% in its market debut. But with direct listings, things work a little bit differently. In a direct listing, the stock exchange and financial advisors will set a so-called reference price, a sort of jumping off point or benchmark usually based on where the company was trading in the private market. However, shares more often than not actually begin trading at a different price. So in that sense, there shouldn't be technically a pop. For Coinbase, that reference price is $250 a share per the NASDAQ. Those like Barrett Cohen, the co-founder and CEO of private market investment bank Scenic Advertisement, believe there's going to be volatility on its debut day, he tells Fortune. But if there's a dip, I think it's going to be short-lived. I think the volatility will mostly be upward. So it says, what is Coinbase's ticker? It's going to be COIN, and it's going to be on the NASDAQ. And then it says a lot of demand. The supply and demand dynamics are what's at play with the direct listing. As Citadel Securities head of execution services, Bill McCain said at Fortune's Brainstorm Finance conference back in 2019 of the Slack listing. You can end up in a situation where you have buyers showing up, but you're not quite sure whether or not the supply is going to be in the market. It goes on to say a direct listing also increases the chances that shares will flop on debut day if the demand is not high enough. Okay, the demand part of the equation, however, likely won't be an issue for Coinbase, given how anticipated the listing is. I think there's going to be a lot of demand from both retail and institutional investors. Still, this person is cautious. I would want to wait to see what happens in the next few months. There's going to be competition. So, interesting. Okay, so tomorrow, you can look for ticker symbol COIN and look for it to, it looks like to start off at 250 a share. And I saw that on another article that they put a price target of $600. So that's going to be really interesting to see if it actually lives up to the hype tomorrow and it comes out. I honestly think it will. I think it's going to, go crazy and shoot up from the get-go. And like they were saying, if there's a dip, it's probably going to be short-lived and it'll continue to move to the upside. So if you are going to try to get in, then just be careful, because these things could always go one of two ways. It could, skyrocket, or it could just dump, as soon as they have as soon as they go public. Sometimes you see these things, shoot up a little bit and just like completely crash. I don't think this is going to be one of those cases, but again, you always want to be cautious. So if you're in it just for a short-term swing, make sure that you set, a stop loss. And if you're in it for a longer term position, then just kind of hold on for the ride and just see where it takes us. So be interesting to see tomorrow. This is one for sure that I'll be watching and maybe try to trade it and hop in and see how, if it's got a lot of momentum, maybe ride it up and see if I can make some money off of it. So we'll see what happens, guys. And best of luck to you, and we'll catch you in the next video.